Good morning, ladies and gentlemen. Today is Saturday, the 19th of March. It's 11:07 a.m. EST time. I'm very, very excited for those that have been able to join us. My name is Jabez Napoleon Ogbole. For some of us that don't know, I'm the Public Relations Officer for Nigerian Canadian Association, Greater Toronto area, and we are very excited to bring you another information session today on tax. 2022 has already, we're almost at the end of the first quarter, and we know our taxes are due. 2021 taxes are due, hence why we have an expert, in our midst who has decided to volunteer our time and knowledge to actually come and impart us and let us know what are some of the expectation from Canada Revenue Agency, what are some of the tricks, what are some of the, things we must do right, to ensure that, our personal income taxes, corporate taxes, if you're sole proprietor as well, some of the important things we need to know and do. So it's very, 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 very important. And we of, majority of us are Nigerians. There's a popular saying, give unto Caesar what belongs to Caesar. So that's why we're here today. And please, if you're with us right now, could you share, however you got the information about this information session, please share with your friends, your family, whatever WhatsApp group you belong to. Please, we are here, we are Nigerian Canadian Association, and our mandate is to empower every Nigerian living in Greater Toronto area. And this is why, on a monthly basis, we are always having various programs, to empower us. It's about time that we take the leadership role. We Nigerians are all over the world. We are smart, we are articulate. We Africans in general are smart, articulate, we are blessed. And hence why wherever we go, we want to carry ourselves along. Very, very important. We want to be our brother's keeper and our sister's helper. So today we're going to go quickly into the information session. But before we do that, I'd like to introduce our guest. And of course, I must introduce, this organization. So I want to thank everyone once again for taking their time to actually join this particular event. And before I introduce my guest, I would like to definitely share, what we are about. So if you can see my screen right now, apologies. If you can see my screen right now, you can see that, NCA, we're all about promoting cultural awareness and positive values. I don't know if you can see my screen.
We can see your screen. Go ahead.
Okay, awesome. Sorry, I'm using multiple monitors, so sometimes it's deceptive. All right, so we're all about promoting cultural awareness and positive values of Nigerian Canadians, whether you are a Canadian. Sorry. So whether you're a Canadian, whether you're a new immigrant, we're here for you. Okay, so please, if you're, you could be a Nigerian by marriage, by birth, by naturalization, by adoption. Okay, you could identify as a Nigerian, never based on association as well. Why not? So please, we want you to continue to, patronize, support us. How can you support us? It's by becoming a member. Our membership is very, very affordable. It's $25 to join, administrative costs, and every year there's a membership due of $50. And this is very, very important because we are not a charity. Okay, we are a not-for-profit. So at this point in time, we are raising money through your membership dues and of course donations and support from business owners, individuals like yourself. And when we do this, what are we able to do? We're able to help new migrants. We're able to help permanent residents. We're able to help Canadians of Nigerian descent. To be able to offer various services. We have so much services. This year alone, we've done information on real estate. We've done information on grants and loans. We've done information on Black empowerment. We've done information on International Women's Day. So we're going to do a whole lot of programs, and we also have a whole lot of opportunities that we're working on. And this is why we actually need you to continue to patronize us and show us your support. All right, guys, so enough of that. If you need to become a member, any friends, family, anyone, please send us an email. You can also call me. I shared my information just now. My number is 647-219-6319. Send us an email, info@ncagta.com. Our emails are very simple. Or even send me an email, secretary@ncagda.com. You know, please, if you need any information, any assistance, you can reach our secretariat. You know, we have our secretary online today. His name is Unamdi Ananke. His email is general.secretary@ncagda.com. All right, thank you so much, guys. So as you join us, please put yourself on mute and use the chat function to ask any question. Any question at all that you have, use the chat question. We're monitoring it and we're going to be asking the expert. So at this point in time, I want to tell you a little bit about the expert who is coming in today. Okay, her name is Foluso Akinyele, and she's the founder of FAAB CPA Professional Corporation. FAAB is FAAB, CPA Professional Corporation. So take note of that name because you're going to be reaching out to her with additional questions and, of course, services. It's an independent accounting, bookkeeping, and tax firm specializing in helping small and medium-sized enterprises to balance their books, process payroll, and file their corporate and personal income taxes. If you have a small business and you need payroll, this is where you need to go to. Can help you pay salaries and make deductions, etc. Okay, Foluso also provides tax planning, bookkeeping, and accounting, payroll, and corporate income tax services for small and medium-scale enterprises. Okay, of course, income taxes for individuals as well. So if you haven't filed your taxes, please, share a contact today. You're going to reach out. However, prior to her current role, she held various leadership positions in large multinational corporations in a variety of industry, and she has also worked with Canada Revenue Agency. We don't bring any subject matter to you. We actually bring the best from the community. And of course, if you know any other person in this capacity, reach out to us as well. We're always happy to showcase all the talent we have in the Nigerian community. Foluso's experience includes finance, accounting, and tax, sales tax, operations, and strategy. She is a strategic thinker, a creative problem solver with intelligence and sound judgment. She has been awarded the CPA, and CFA designation, and also possesses an MBA and bachelor's in accounting. So it's a full package. She's about to complete the Canadian Payroll Association Payroll Compliance Practitioner Certification. So this is a subject matter in the field of accounting and taxation. So she likes to build long-term relationship, providing the very best service possible, as our number one priority. Like I said, guys, we're already bringing the best here, guys. So at this point in time, Foluso Akinyele, please unmute yourself, and I'd like to, welcome you so you can take over. Thank you so much.
Thank you, Napoleon. Good morning, everyone. I will be sharing my screen. So the mandate is 15 minutes of presentation, and then we take questions. So 1 sec while I share my screen.
Yeah.
Okay, dokes. All right then. So, like Napoleon mentioned, this is my practice, and I will go straight into the presentation. Now, usually, because there's a possibility that there would be people who came into Canada recently and might not really know about the tax system, I usually would try to do like a rundown of a rundown of how the tax system works, right? Okay, so the Canadian income tax system is a self-assessment system, and the way it works is that institutions, employers, and organizations will provide tax slips to you as individuals and also to the Canada Revenue Agency. 1 sec, I need to. Okay. Okay, so the way it works in the Canadian tax system is that the organizations, institutions, employers, and organizations would provide tax slips to you and also to the Canada Revenue Agency. And so basically what happens is you have a copy the Canada Revenue Agency has a copy. So do not assume that if you don't report some income that you have from your tax slips that it won't be noticed. There's usually a matching program where when you file your tax return, initially it will be assessed, but then the Canada Revenue Agency will still go back to see, okay, what did this person file compared to what did we have on file for the person? If they're not the same, then there would be a reassessment. Okay, so also business income, rental income is something that needs to be filed as well. Really, the CRA has limited or no information on these types of income. So it's basically whatever you declare, right, that they would take, because there are no tax slips for those. So you would notice that, but they still kind of find ways to determine if what was filed was appropriate or not. And there are usually harsher penalties for people who do not file complete business or rental income taxes. So like I'd mentioned before, the Canadian income tax system is based on self-assessment. It is your responsibility to file your tax return and to file it completely and accurately, right? And then we also work in the Canadian tax system. There's also the deductions and the tax credits. So deductions and tax credits are entirely up to you to claim. And we usually, the CRA would usually review some of these deductions and tax credits just to be sure that people are not just filing whatever they like. They would like to, you know, be sure that everyone is doing what needs to be done properly. So I guess the first question would then be, who must file a tax return? Or do you have to file a tax return? And the answer would be, it depends. So if you have a tax liability, then it's a no-brainer. You should file a tax return and pay the amount that you owe on it. If you're self-employed and you have self-employed income, that means you have income that will be subject to CPP. CPP is a Canada pension plan, and then you would have to pay into the CPP system. If you get a letter from the CRA asking you to file a tax return, then you have to do so. If you contributed to your RRSP and you made a withdrawal before you were 65, then you would need to file a tax return, because the RRSP will be withdrawal that you made will be considered as income as well. If you sold investments, property, stock, real estate, you should file a tax return as well. Okay. So another question then would be, why should you file a tax return? And these are some of the reasons. If you're expecting a refund, you should file a tax return, because that's the only way you'd be able to get the return. And then many of the Canadian benefit systems are triggered by filing a tax return. So for those who have childcare benefit, GST, HST return, and all that, you will notice that they use your family net income to determine those things. If you don't file your tax return, there is no way the government will be able to determine what your income is and what benefits should be paid to you. So if you don't file your tax return, you don't get benefits. If you have a loss to claim, it's a good idea to file a tax return, because you can carry your losses forward and use them in the years when you have gains. If you're entitled to refundable tax credits, you should file your tax return. Now, what are refundable tax credits? Refundable tax credits are credits that the government gives, and are able to give it to you as cash or as a refund, technically. So if you have refundable tax credits, you should file a tax return. That's the only way you'd be able to get the money. If you have income, if you earned any income at all, you should file a tax return so that you can begin to accrue your RRSP room early on. So basically, usually when you file a tax return, there's a certain percentage, about 18% of it, that is considered the RRSP room for the next year. So year on year, you can keep accumulating that, and then whenever you decide to contribute to your RRSP, you'll be able to use the contribution room that you have. But then if you don't file a tax return, the CRA does not know what your income is, so they didn't give you an RRSP room. And then if you're a student and you get tuition credits, you should file a tax return, because you would be able to use those tuition credits, even though you're not earning income now, you'd be able to use the tuition credits in the future when you begin to earn income to reduce your tax liability. And then the tax filing deadlines for individuals is April 30th. And if your April 30th falls on the weekend, it's the next working day after April 30th. If you owe taxes, you need to pay the amounts that you owe before the 30th of April as well. Self-employed people you can file your tax returns by the 15th of June. And if you're a spouse of someone who is self-employed, then you're also allowed to file your taxes by the 15th of June. But then whatever payments you need to make, whatever amounts you may owe, needs to be paid before the 30th of April. So that's why you would usually see people, self-employed people, filing their taxes before the 30th of April, because how then do you know how much you would owe the CRA? Deceased taxpayers would need to file by the 30th of April or 6 months after the date of death. And then for estate trust returns, it's 90 days after the year end of the trust. So there are penalties for not filing your taxes on time. There's a penalty and there's the interest. So it's not advisable to late file a tax return, even if you don't have the money to pay the taxes. Penalties and interest can be quite steep and often can accumulate to more than the tax owing. So please take note. Try as much as possible to file your tax returns on time and to begin to pay whatever you owe. So even if you don't have enough money to pay whatever you owe, you can call the CRA to ask them for a payment plan, like a payment arrangement. I would pay a particular amount every, month or every 2 weeks, and they're really always willing to, accept payment arrangements to pay the taxes that you owe. Now, that doesn't change the fact that you will still have to pay the interest on the balance that you owe, but at least you are sure that your file isn't going to collection. There's no hold on your accounts in any way. And what ways can you file your tax return? You can file by paper, where you download the forms, you fill out everything, and you mail it out. That's the slowest method. It will probably take about 8 weeks for the CRA to assess those returns. And then you can do it by phone with File My Return, but then you must receive an invitation to use this. Not everyone can use it. If you don't get an invitation to do it, then you can't use it. It's usually for very simple tax returns and usually for low or fixed incomes. You can e-file with a tax preparer like me, and the benefit of that is faster refunds, improved accuracy, it's paperless, you get a confirmation immediately that your tax return has been filed. You could also use the online softwares like the net files. The same thing, faster returns, it's paperless, and you know when your tax return has gone through it. Another option is the Community Volunteer Income Tax Program. This is where, people, volunteers set up in libraries, set up in centers to assist people to file their tax returns for free. And they usually would not take complicated tax returns. So they just take the simple tax situations, modest income, and they would file your tax returns for you. And then just to mention that for documentation purposes, all information, all documents, all receipts should be kept for about 7 years, because the CRA can decide they want to review a couple of years back. So you should be able to provide those documents. Okay, so the tax system in Canada, and I'm focusing on the federal because we have the federal taxes and we have the provincial taxes. We work with the marginal tax rate system. And what that means is that when your income is within a particular bracket, it gets taxed at a particular percentage. And then when it goes outside that, the difference, the excess over that tax bracket gets taxed at a different tax rate. So for federal alone, on the first 49,000 of your taxable income, there's a 15% rate. And then between 49 and 98,000, whatever income you earn within that portion will be taxed at 20.5. The same thing for 98 to 151, 26%. So it keeps going up, going higher and higher. And I usually like to take a moment to talk about tax deductions and tax versus tax credits, because when you go take your taxes when you go to prepare to get your taxes done, they would ask you, do you have receipts? Do you have this? Do you have, so basically what they're trying to do here is to claim tax credits for you or tax deductions for you, right? So for tax credits, they are calculated on the T1 tax return, and the tax savings are based on the lowest tax rate. So they're usually based on the 15% I showed you. Now for tax deductions, they are deducted from your total income to arrive at your taxable income. So technically, the tax savings are at your marginal tax rate. So they are the highest portion of your tax rate and can be more lucrative than a tax credit. So examples of the tax deductions would be RRSP contributions. When you contribute to your RRSP, it reduces your taxable income. When you pay for childcare services, childcare expenses for your children, it's deducted. It's a deduction, so it reduces your taxable income when you pay for professional dues, moving expenses, employment expenses, and all that. Those kind of things, reduce your taxable income. Now, examples of tax credits is a basic personal amount, which is something that the government gives to every resident of Canada. The age amount, the tuition credits when you go to school, donation credits when you contribute, when you donate to a church or donate to a cause and they give you a donation receipt, home buyer's amount when you buy a house for the first time, spousal amount, medical expenses. So those ones are usually tax savings on a lower tax rate, but the tax deductions are usually at a higher tax rate. Okay, so usually when you file your tax return, you will get a notice of assessment, and it's the most important document issued by the CRA. Right? That's what third parties will use to verify that you actually filed your tax return. So you notice that if you're trying to buy a place, you're trying to get a loan, you'll be asked by your lenders and by your bankers to provide your notice of assessment. That's one of the first things they would ask for. They're asking because that's the evidence that you have filed a tax return. Now, so the notice of assessment will tell you the summary of the taxes that you filed. It will tell you what your RSP contribution limit would be for the next year. And if you should be able to see that on your CRA account online, but if for whatever reason you can't access a copy of your notice of assessment, you can always call the CRA to ask them to mail you one. They will do it for free. And then we have the notice of reassessment, and this is issued by the CRA when there's been a change to your income, to your deductions, to your tax credits or carry forward amounts for a particular tax year. Some of the reasons why you would have a change or a notice of reassessment is if you missed a tax slip when you filed your return. I mentioned previously that the CRA has a record of your tax slips. So when you file your tax return, they compare. If they realize that there are discrepancies, they would reassess your tax return and send you a notice of assessment. If you as a taxpayer request for an adjustment to your tax return, then you will get a notice of reassessment as well. So it can be issued by the CRA after a tax year has been audited and there are changes. And then if you do not agree with the content of your notice of reassessment, you can always challenge it. You have 90 days to be able to do that. Like I mentioned previously, the CRA, Canada uses a slip system of reporting. So your employment income will come in T4s, your investment income will come in T5s, different kinds of slips, tuition will come, other slips will be the tuition slip, the employment expenses slip and all that. So these are all the things that you would use to file your tax returns. Okay, so the updates we have for 2021, majorly it's there are just about 3 or 4 of them. The first one is repaying your COVID-19 support benefits. Due to the pandemic, the government provided benefit to taxpayers, CRB, CRCB, and all that. And the CRA will send out T4A slips for those payments, right? And that will be included on your tax return. But we've had situations where people collected the COVID benefits and then realized that maybe they weren't entitled to it, and then they returned the money back to the CRA. So the CRA is saying that in that kind of situation, you'd be able to put the amount, they would give you a tax slip to put the amount that was refunded on your tax slip to reduce your income as well. I also like to mention that with the CRB, with all the COVID benefits that the government gave out, usually the max they took out as taxes is 10%. But like I showed you on the marginal tax rate, minimum tax rate federal is 15%. So you can already see that there might be a tax liability. You might have a tax owing because you collected one of these COVID benefits, depending on your tax situation. So going back to the support payments that were returned. So if you returned COVID benefits, then you would be able to include that on your tax return. So the CRA is saying that individuals who repay certain COVID-19 benefits before January 1st, 2023 can choose to deduct the amount on their tax return for the year they received the benefit or the year they repaid it. And you can also split the deduction between the 2 returns as long as the total deduction is not more than the total repayment. So you can decide that 2021, putting some of the refunds, on my tax return, and I'm putting some on another tax return, maybe 2020. But if you add the total repayments together, it mustn't be more than the total repayments that you actually made. So repayments made in 2021 will be reported on 2021 T4A slips. That's what the CRA has promised. Repayments made on or after January 1st, 2023 must be deducted in the year of repayment. And then we have the climate action incentive. So there were some provinces that used to give out the climate action incentive, and you would see it's about $300. It used to be about $300 for an individual. If you're married, it goes up a bit. If you have kids, it goes up a bit more. That used to be a refundable tax credit that the government would give back to you. So even though you were not entitled to, even though you didn't have a refund, or you filed a nil tax return, but the fact that you were living in a particular province the whole of that year, maybe Ontario, for instance, the government would give you $300 when you file your tax return. That's what happened up until last year. But this year, the government has said that the climate action incentive will no longer be claimed annually as a refundable credit on your personal tax returns. Instead, they will give it to taxpayers quarterly. So the way they give GST, HST quarterly, they would then begin to give this one quarterly as well. And that they would pay double in July for April and July, and then they will pay October and January. So technically what they're telling us is that you will still need to file a tax return in order to receive these payments, but the payment will start July 2022, and then it will be quarterly going forward. So people who were getting that $300 on their tax return previously, you won't get it anymore. Most likely you'll probably be getting $75 every quarter going forward. Okay, and then the CRA also talks about electronic notices of assessment. The government is proposing to change how the CRA communicates with taxpayers and their advisors. So the proposal will allow CRA to send certain notices of assessment to the taxpayer electronically without the taxpayer's authorization. This applies to those who use the online method of filing. So whether you're doing it yourself with NetFile or using a tax preparer with eFile, you will no longer receive a paper copy of your notice of assessment if you were getting that before. The implementation is supposed to take place in July of 2022. It might change, but for whatever reason, so for returns filed through eFile, taxpayers' options would be to receive their notices of assessment through their account, their CRA account online, or from their taxpayer. This might change because I know they're still having conversations and discussing on it, but the proposed implementation date for now is July of 2022. And I usually like to talk about employment expenses because we have situations where people work from home these days because of COVID. So I would just, give a bit of an update on that, and then I think that's it. We'll be able to take questions. So employees cannot claim expenses on their tax return, such as travel to and from work, amount for work clothing or shoes, personal groomings, and all that. They are all considered personal. And the rule applies to everyone, even business owners, whether you're corporate or sole proprietor. You cannot put I'm going to work, the cost of your transport on your tax return. So how do you deduct employment expenses? To claim employment expenses, you must get there's a form called T2200 Declaration of Conditions of Employment. Now there's an abridged version of it right now, which is the T2200S, which is because of the people working from home because of COVID. So your employer gives that to you, and what that means is that you'd be able to deduct your home expenses on your tax return based on the space of your house that you use. Okay. So working from home due to COVID. So there are two methods of doing this. I've mentioned the first one where you'll be able to do the detailed method if you have a T2200S. So you'll be able to deduct your rent, your gas, your hydro, your internet, whatever home repairs and maintenance, whatever expenses, based on the space the portion of the space of your home that you use for the office. And there's also the other method where the employer didn't give you a T2200S, and you work from home due to COVID, you're allowed to claim an employment expense of $2 per working day, up to a maximum of $500. So if you work for 300 days in the year, for instance, 300 times 2 is 600, you can only claim 500. So with that, this method is usually easier because the CRA is not reviewing anything in that case. They're not checking to see, did you have receipts? Did you have any of all those things? No. But for the detailed method, you would need all that. And I've also noticed that for those who own their homes, because your mortgage payments, your interest on mortgage payments, you are not allowed as an expense for working from home. As part of your home expenses, usually it's not worth it to use the detailed method. You actually get a better deal if you use the $500 flat. And then there's increment, and then also the work of the T2200. It's a detailed method. You probably have to pay a tax preparer some more money to go through the detailed method. And the CRA can also come back to say, okay, I want to see the receipts for your gas, I want to see the receipts for your rent, for your hydro, and all that. So usually the incrementally greater amount that you may be able to claim using the T2200 may not be equal to the investment of time and effort. Okay, so I think this is, and then we have the commission sales people who we usually will be able to claim a bit more than regular employees. So the filing requirements, you don't need to file the T2200. You don't need to file the receipts, just keep them. Should the CRA ask for them, then you provide them to them. Okay, so in conclusion, file your returns before the deadline to avoid interest and penalties. Be informed, research or engage the services of a tax consultant. Register for your CRA account, because I mean, that's the way you would be able to see real time what's going on. You can change your address, you can update your information, you can print out your tax slips are also on there. You can always get access to your notices of assessments when you need them. You can see what your childcare benefit would be next month, when it's going to be paid. So it kind of gives you all the information you need instead of calling the CRA and spending an hour or so on the phone. Keep your receipts and documents, like I mentioned, the CRA could ask for them at any point in time. And then if you made a mistake on your tax return, that's not a big deal. Just send a request to the CRA to adjust your tax return. Okay, and as much as possible, try to stay true, only report what really happened, because the CRA could always come back to review. So it's better to stay true. Okay, so that brings me to the end of the presentation. If we have questions, I'll be able to take them now.
Thank you. Thank you so much, Foluso Akinyele. It's quite informative. I was taking note as well. Yes, so please, everyone, type your question. You're not going to have the opportunity to ask, so that we can have very, Demola, can you put it on mute? Okay, so please, everyone, gonna go on mute and use the chat function to ask your question. And so far, we have Foluso's contact information right here on the screen. So if you need to reach out to her, you can see our address there. It's 1625 Albion Road in Etobicoke. Our cell phone number is 289-885-4026. And of course, info@FAABCPA.ca. We'll try and see if we can post that on the chat function as well. So let's go straight to the question. I have a couple of questions here, and I'm monitoring the chat as well. And we have one here that says, so this has to do with tax filing software. Is TurboTax also a good tool for tax return filing? Foluso, do you have a response for that?
Yeah, well, I believe it is. So usually we don't recommend. So what you do is when you go to the Government of Canada website, you would see all the softwares that you can use. So the CRA won't tell you, for instance, which one is better. I don't know that anyone is better than any other one, but if it's one of the ones that the CRA says you can use, then I'm sure it's pretty much can get the work done.
Okay. All right. Thank you so much. So Ade says, I'm a newcomer and I'm finding it difficult filing my taxes using TurboTax. I'm getting a CRA result code 3.31. I call CRA and they asked me to mail my details to them. I haven't heard back from them since then. Kindly guide me on what to do.
Okay. So usually sometimes some of these online tax softwares, when you're filing your taxes for the first time, it might not go through. Rightly, like you said, when you call the CRA, they'll tell you, print out the tax return, put it in an envelope and send it to us. Another option would be to use a tax preparer. It always goes through, right? But then if you decide to mail it to the CRA, like I'd mentioned, if that's like the paper copy, it's a slower process. It would take nothing less than 8 weeks for the tax return to be assessed. So it's usually, so you need to give it a bit more time. And the 8 weeks is minimum. Sometimes it could even be longer if they have a backlog of tax returns to process. So if you've mailed it to the CRA, that's fine. Just give it a bit more time. It would eventually come through.
Okay. Thank you so much, Foluso, for that. Another question here. I don't know if I get it, but I say, can you please explain a bit about deductions and the rates you highlighted at the start of your presentation? You know what that is, Foluso?
Yeah. So I had mentioned that there's a difference in tax deductions and tax credits. So for tax credits, it would be at the lowest tax rate, which is 15% federal, for instance. And I was saying that tax deductions, because they reduce your taxable income, so technically it's at the marginal tax rate. So I was trying to explain that if, for instance, my rate, let me go back to the rate slide. Okay. So if, for instance, I have a basic personal amount, that's a tax credit, it will be at the 15%, right? No matter what I do, medical expenses, tuition, credits, all that will be at 15%. There's nothing I can do about that. But then if my income was if my income was 60,000, for instance, right? I would have my first 49,000 at 15%, and then the difference of 11,000, for instance, would be at 20.5%. But then assuming I had a tax deduction like an RSP receipt or childcare expenses or employment expenses, that was 11,000. So my taxable income would drop to 49,000 and put me back in the 15%. So do you see that instead of being charged at, even though instead of that 11,000 being charged at 20.5, it would be technically I'm being charged at 15%. So what has technically happened is that I've used a marginal tax rate. That's why I said that the tax deductions are actually more lucrative than the tax credits, because it reduces your taxable income, and it's your taxable income that determines what your tax bracket would be. Okay, how about it? Yeah, all right.
Awesome. Thank you so much. So for individuals, next question, for individuals who have a regular job and get a T4 and also have self-employed income, what is the best way to file in order to get the most tax credit? Can the self-employed income be filed separately?
No. So if it's a self-employed income, then you would file everything on your tax return. So when we say you're filing your personal income tax return, it means everything except your corporation, right? So if you have inside that your personal tax return, you will have your employment income, you will have your self-employment income inside. So there are two different things. There are different ways to report them, but everything will still come back to become your total income. So if you have expenses, for instance, on your self-employment income, you have income, so it's kind of like the profits on your self-employment income that will be added to your employment income, and then all your tax credits and all your tax deductions will be considered to determine what your tax liability will be, if any.
Okay, thank you so much, Felicia, for that. So I just keep calling out the question as we go. Alexandra, a copy of this video. Yes, I will post it on the YouTube channel. So Alexandra, you can get a copy of this video. I will share the channel with you shortly, or our secretary will do that. Next question, how can businesses avoid tax legally? That's impossible.
So how to avoid taxes legally, it also depends on the business. So there's no one answer. It's not something that I can say, I won't say just put all the expenses in the world into it. It won't work that way. So everybody's situation will be different, right? So if we had specific situations, then we could discuss. But then there are ways to reduce your expenses, to increase your expenses, as long as they're really business expenses. So it's just kind of more like tax planning, really, and looking at the situation and then coming up with a strategy. Without more information, and I can't say much, but what I would say is that the only way to reduce your taxes as a business is if you're not making as much. If your profit isn't as much, then you pay less taxes.
Thank you so much, Felicia. Yes, so please, Demola, you can actually send an email to Felicia, info@faabcpa.ca. If you can be more specific, she'll be able to help there. Next question says, do prescription, grocery, and other spend qualify for deduction?
Prescriptions do, if you paid out of pocket. But it's but groceries, no, that's everyone eats grocery, everyone eats, so it's not part of the that's your personal expense. So but prescriptions would do, prescriptions, dental, vision and all that, as long as you paid through your through out of pocket, then you can claim that on your tax return. Yeah, but it's usually a bit dicey for medical expenses, because there's a formula in determining whether even the medical expenses you incurred would actually be useful on your tax return. It also depends on your income, because the percentage has to be compared to the percentage of your income to determine if you can claim it or not. So, but yes, the answer to your question with that, prescriptions can be included as medical expenses on your tax return.
Okay, thank you so much for that question. Inke wants to know, can you please go over how to claim the first-time home buyer's benefit? $5,000 versus $750. Are you familiar? Okay, go on, please.
Okay, yeah. So the home buyer's credit is something that you get if you're buying a home for the first time. You only get it once. And the amount is 5,000. But like I mentioned in my previous slide, home buyer's amount is a tax credit, and it is at the lowest tax rate, which is 15%. So technically, what you're getting is 15% of 5,000, which is why it is 750. So if I had a tax refund of $1,000, for instance, and then I am before putting in the home buyer's tax credit, right? And I click, and I then signify that I bought a home for the first time, then my refund can go to $1,750, depending on my tax situation, right? So it's only 15% of the 5,000 that would go on your tax as a tax reduction for you, so to say, right? So that's where you have the 5,000 versus the 750. The 750 is the 15% of the 5,000.
Thank you so much for that clarification. There's a follow-up question from Inkem. I don't understand this, so Inkem, please clarify. You said, I mean, what time to do when filing using TurboTax? I don't understand that, so re-clarify. The next question says, how are student loans reported? What impact do student loans have on claim deductions? Hold on, someone is interrupting. Let me put the person on. Please put yourself on mute, otherwise I may exit you from the group. Okay, so I'll go back to the question, and it says, how are student loans reported? What impact do student loans have on claim deduction and taxable income?
What you can claim as a credit with regards to student loans is the interest on the student loans. So if you pay interest on your student loans at the end of the year, when it's towards the tax season, that body, the Canada, the student loan program will send you a receipt that shows a tax receipt that shows you the interest on the student loans you paid that year. That can be included on your tax return as a tax credit.
Thank you. So I hope that clarifies for the person that asked the question. Next question says, someone advised me to file self-employment separately under a business account, for example. What's your take on this?
I'm not sure I understand that. Is it if it's a corporation, if it's an incorporation, if the company was set up, then you can't include it on your personal tax return. But if it's a sole proprietor, even if it's a business name, so if for instance it's just I have a side also that I got a business name that says Baby Treasures, for instance. It's a business name, not an incorporated company. Whatever income, whatever revenue, whatever expenses on that Baby Treasures would be on my personal income tax return. But if it was Baby Treasures Limited or Baby Treasures Incorporated, I incorporated the company, I cannot include it on my personal income tax return. I will have to file a corporate tax return for it.
So thank you so much. So Peter, I hope that clarifies. This question says, should couple file taxes together?
I usually say yes. So at the end of the day, it's still 2 tax returns that will be going to the CRE, one per for each individual. But at the end of the day, usually when you file it together, it allows you to move things around to ensure that you get the best outcome in terms of refunds or best tax outcome for the family, because there are some expenses that you can swing it that way. For instance, donations, for instance, I can put my donations on my husband's tax return, he can put his on mine. And usually, because donations, the calculation of the credit it's better for it to be one person's tax return than both of you splitting it. You will get more in terms of tax credits if you put it on one person's tax return, for instance. So if you are going to file your tax return separately, and then I've gone to file my tax return separately, and then we both claim that donation separately, we've kind of left money on the table, right? And then also the headache of, because on your personal tax return, on my personal tax return, I will still need to put in my husband's net income on my own tax return. So I'll still have to ask my husband to give me what was the income on the line, blah, 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 your tax return. I need to put it on mine, and he needs to put it on his. He needs to put mine on his as well. So usually it's better to file together, to use either you're using a software or a tax preparer, file it together so you can get the best possible outcome for the family.
Awesome. So in summary, you're saying that married couples could also file separately. It's not illegal.
It's not illegal. It's just like, because when you say you're married, the next question it would be putting your spouse's details, saying and name and all that, and then the income. So it's not illegal. You can put it. It's just that you might be leaving money on the table when you do it separately.
Thank you. And the next question says, as sales on the property, okay, the property which I live in, if it's sold, is it taxable?
If it's where you live, then most likely it's your principal residence. And so sale of principal residences are not taxable. So if you're living in a house and it's been designated, you've been living in it for a year, and you designated as your principal residence, and you decide to sell it off, you don't pay taxes on it. But then if you have other properties that you don't live in, if you do sell those, then you would have to pay capital gains on capital gains. The capital gains on it will need to be included on your tax return.
Okay, awesome. Thank you so much. And if I may add on that question, what about new constructions? Because there's a tax credit on new construction. If they sell it, there's no tax as well?
So if as long as it's your principal residence, if you sell it, there is no tax on it.
Okay. All right, thank you so much. So guys, we have 5 minutes to round up. I'm just going to take a few more questions if you have. So please, I'll take another priority who asks first. However, you made mention about filing a tax return when you have a tax liability. For individuals who have zero income, do they need to file taxes? Yes,
they still need to file income, because that income, that zero income is an income. It's a record. Because remember, I mentioned that when the CRA is trying to determine your benefits, determine what your entitlement should be, they use net income. So if you didn't file a tax return, they won't even know what your situation is. So they'll just leave the file. They won't do anything about it. But if it's zero income and you file your income at zero, then they know that it's zero, and then they work with that number to determine what your benefits should be. So yes, you should still file a tax return, even if it's zero.
Wow, awesome. Thank you so much. The follow-up question to that is, we have a lot of Nigerian migrants in GTA, and we know that many of us may be permanent resident or Canadians, but we work overseas. So if I'm a permanent resident, I'm a Canadian, and I work overseas, do I still need to file my taxes because the incomes are not made in Canada?
Yeah, so the rule is that you file your taxes on your worldwide income. So it doesn't matter where you're working, as long as you're a resident for tax purposes in Canada, your worldwide income is what you're supposed to declare in your tax return.
Okay, awesome. Thank you so much. I'm going to ask another question while we wait for others to ask as we round up. You know, this season is the season for Black entrepreneurs, Foluso, and there's a whole lot of grants and loans for Black entrepreneurs. And there's a word that keeps coming up: financial statement, audited financial statement. What is the difference?
So financial statements is like your income statement, balance sheet, prepared by an accountant or even prepared by yourself, if you can do it by yourself. Now, audited financial statements is the one where you get an auditor to come in, take a look at the books, and to tell you, to come up with a report that says that your financial statements provide the true and fair view of of your situation. But I don't believe that for grants, they would be asking for audited financial statements. Worst case scenario, they probably be asking for notice to reader, which is just to say that an accountant, a CPA, prepared the financial statements or took a look at the financial statements, right? But the assurance on it is pretty much low, because we are not the declaration is that this is a financial statement. It doesn't say whether it's a true or fair view. It doesn't say whether there are any material misstatements. So I would expect that for grants and loans, they should be able to take a notice to reader or a regular financial statement. They hardly ask for audited financial statements for small businesses that I know of. Yeah.
Okay, thank you so much for that. So as we round up, guys, we have 3 more minutes. We're just going to take questions for the next 2 minutes and we round up. We want to keep to time. We know it's a Saturday. So I'll just take these last 2 questions, which says, so regarding real estate, if I invest in a property and I reassign it to sell rather than close it, do I still pay capital gains?
Yeah, so so it's the intent at the end of the day. So if you reassign it to somebody, you're kind of selling it off. The person paid you off. So the proceeds minus the costs, the amounts you made versus the amount you incurred on it, whatever the difference is, would be capital gains, and then that would be factored in on your tax return. So the answer is yes.
Yes. Okay. Thank you so much. I'm going to take on the next question, and I also nudge our secretary. So we're going to round up shortly. So Nandi, please get ready. So, what is the definition for resident tax purposes? Does someone that lives in Canada for less than 6 months regarded as a resident for tax purposes?
Usually, I tell people to call the CRA to confirm, because I've realized that everyone's situation is different. So when you call the CRA, they then begin to ask you to probe further to know the situation. There's a form you would need to fill out and send to them to determine your residency status in terms for tax purposes. So if you want to determine if you're a resident for tax purposes, I would suggest you call the CRA. There's a form they will give you to fill out. They would have a conversation with you, and then they would let you know what it is.
Okay, thank you so much, Felicia. So I'm going to ask the final question, guys. I know you have a whole lot more questions. Felicia's contact is on the screen right now. You reach out to her. The final question is from Ade, and we're going to round up because it's 11:59. What about living in Ontario and working in another province remotely, for example, Quebec? Quebec have higher taxes. So how do you file your tax, or how do you reconcile the amount?
Okay, so that's pretty straightforward. Usually you would file your taxes based on your residence, right? So if you're a resident of Ontario, even though you're working in Quebec, for instance, your taxes, your tax rate and all that will be on the Ontario tax rate. So all the tax slips you get from Quebec, the ones you got from federal, everything will be included on your tax return, and then you will probably get a refund. So if Quebec was charging you a whole lot more than, because I know that Quebec taxes are quite steep as well, so you would be able to get a refund back.
So thank you so much, Felicia. I mean, it's been an amazing 1 hour, and I know everyone that's attended, you've all been blessed with this information. I want to thank everybody once again. We've come to the end of this session. However, Felicia, if you I just beg your pardon, let me take the final question from Peter. That way we know we answered all the questions. Okay. Peter says, please, he asked the question before, but he needs some clarity. Could you clarify the 5,000 versus 750 first-time home buyers credit once again? From what I understand, you don't get the 5,000. Rather, 50% of it is what will be a tax credit. Correct or wrong?
Correct. So the amount is 5,000. So let me explain it this way. So the way tax credits work is you have all your taxes. So you have your basic personal amount, you have your tuition, you have your Canada workers amount, you have all that. You have your home buyers. We add all your tax, all those tax credit thingies together, and you get an amount, and then we apply 15% of that amount to it. So 15% of the 5,000. So if, for instance, when we then get to what your income is a particular amount, and your tax should be, let's say your tax should be 3,000. Your tax amount based on your income should be 3,000. We will then take the 15% of your 5,000, which is 750, and use it to deduct the amount that you should have paid as tax, for instance, and then the net is what becomes your tax payable. I hope that's clear. So basically what you're doing is you're taking the 5,000 is what is offered, but you can only get 15% because we work with just, okay, it's like saying your basic personal amount is 13,000. We add your home buyer's amount of 5,000 to it, we get 18,000, for instance. 15% of that 18,000 is what we would use to deduct your taxes based on your income to determine what your tax liability will be. I hope that's clear. So the same way, if I earned 40,000 as my income, right? 15% of that 40,000 is what I would be paying as I did if there was nothing else. 15% of that is what I'll be paying as taxes, right? But then I bought a house. So they gave me 5,000. So 15% of that 5,000 is what I'll be getting as a deduction from my taxes. I hope that clarifies. If it's still not on, if you still don't get it, then you can probably send me a message on my telephone number. We can discuss it further.
Awesome. Thank you so much, Foluso Akinyele. We're very grateful for your time, and we appreciate you, and we thank you once again. And just before we go, let me give you the opportunity to, final words. Anything you'd like to tell everyone here, and then round up.
All right, thank you. It's been a pleasure and sharing my knowledge with you guys. Well, my flyer has been on the screen for the past 30 minutes. So I do render tax filing, accounting, bookkeeping, personal corporate taxes, GST, payroll, and the whole works, right? So if you have any questions, any comments, anything you'd like to touch base with me on, or you need advice on, you can always reach out to me. I'm more than willing to assist in any way that I can. All right, thank you.
Thank you so much. So once again, thank you, Foluso. We definitely would love to have you back, and thank you so much for the information. So we're rounding up, guys. So quickly, I'd like to let everyone know that we continue to solicit for your support. NCA, Nigerian Canadian Association of Greater Toronto, requires, your membership and donation continue to help us, render services to the community. My name is Jabez Napoleon Ogole. I'm the Public Relations Officer. So please, if you know anyone out there who wants to, join the community, if you're not a member, I don't know what you're waiting for. Please join us. We need people like you. Okay, we need a whole lot of hands to continue to, support Nigerians in Greater Toronto area, support ourselves. If you have a business, you are self-employed, we want to propel each other. Your success is my success. We believe so much in group economics. Okay, together we can. If you can achieve what you have done alone, just imagine. If we come together. So guys, please, my number is 647-219-6319. Send me a text message, call me if you want to join. I will share the information with you. Remember, we're on various platforms. We're on YouTube, Nigerian Canadian Association. We have a website, www.ncagta.com. Go there. We have our Instagram. We have our Twitter. Of course, send us an email, info@ncagta.com or pro@ncagta.com. We have a toll-free number. You have an emergency, you need information, please, call us, +1 866-319-2917, or call my cell phone. That is why we are here for you. So thank you once again. And as we go, Unamdi, are you available?
Thank you. Thank you very much, Napoleon. Let's close it. You've done a wonderful job. And thank you, Foluso, for joining us. And thank you to everybody who spent their Saturday with us. Thank you so much. Have a wonderful day.